Welcome back to another week in review. We're looking at the week of February 3rd, 2025. We're going to be looking at the S&P 500 futures as well as the NASDAQ. Just to start off here, this week we have quite a bit of data and earnings that come out that are impactful. Not much on Monday aside from PMI data and ISM, 9:45 and 10 a.m. Eastern time respectively. We do have Palantir after hours if you care about Palantir on Monday for earnings. Tuesday, we have Jolts data, as well as Tuesday after hours, we have big reports from AMD and Google, as well as Snapchat. If you care about Snapchat, it seems to gap down every single time, so good luck with that one. Wednesday, 8:15 a.m. I always forget this one because it's 8:15. It's an odd time. We have the ADP employment print that comes out, as well as services data and ISM, 9:45 and 10 a.m. We have QCOM reporting after hours on Wednesday, so I would note that. Thursday, jobless claims as usual, 8:30 a.m., and then earnings Amazon after hours, which is very important on Thursday as well. So there's that, and then Friday we have NFP. So we have NFP in the employment rate as well as consumer sentiment. So 8:30 a.m. Will be NFP, 10 a.m. is consumer sentiment. So all really important things this week to keep track of, which you should be noting down because it's going to create some volatility intraday before and after hours as well with those earnings. So just to get that out of the way, we're going to start with the S&P 500 here. We're in balance right now. So as you can see on this chart that you have right here, similar to the last review that I did, we're still in a state of balance. What I will say is that the framing of this has changed a little bit for me. So going into last week, obviously Monday, we had that massive liquidation that happened with the DeepSeek news. Whatever opinions you want about, if that was a fake move, that flushes hands, it doesn't really matter. Why it happened. The reality is that it happened, and we just have to kind of, look where we go from here as a result of, a multiple 100-point liquidation of range overnight, which is insane. So we had that come out. Ultimately, that actually set the low for the week. It got bought back up, and then we grinded higher most of the week. We had an extremely messy few days here with the FOMC releases as well as earning releases. Very whippy, very nasty intraday to be a trader in this action. And then ultimately Friday, we were able to grind back up into balance highs. We actually filled the RTH gap, which is up here. You can't see it on this chart because this is the ETH, but we filled the RTH gap that was left up here from this gap down, and we reversed extremely hard, prompted, I guess, by the tariff tweets by President Trump. So again, I have my opinions about as far as what this looked like to me the last couple of days of this week. It looked to me like every push higher, at least on the order flow side, every push higher was met on the offer very quickly, especially on the NASDAQ. It got soaked and absorbed very, very, very fast with buyers with a lot of size weren't making a lot of progress up into these highs, which was a huge red flag for me in the last couple of days of last week, especially on the NASDAQ. The amount of size that we saw really should have broke away much faster and aggressively than it did. And going into Thursday, I actually thought, we might have a rotational high put in. Apple kind of saved the market a little bit, gapped us, and then ground higher, and then ultimately liquidated Friday very aggressively on the NASDAQ back into the base of weekly value. So I'll talk about that in a minute, but the last couple of days to me were tricky in the sense of I didn't see much that I really wanted to be a buyer on, again, because of how aggressive some of this move was without really getting anywhere, if that makes sense. So there was a lot of effort, but there wasn't a lot of result. And when I see that, my guard kind of comes up. So going into this week, I'm more interested really in this. I'll back up here. We're in the middle of balance, so we have to be fairly neutral in the way that we look at this because we're basically trading dead center of a larger range. So with that being said, we're certainly going to have opportunities on both sides of this tape. As far as where I want to be positioned, at least from what I saw last week, I'm more interested on the sell side of this, especially if we see buyers start to start to fail quickly. So if we see a gap down take place on Globex or on Monday in regular trading hours open, I'm going to be more interested in seeing if we can get that continuation lower rather than looking for the bounce. And one of the biggest reasons for that is what I was just talking about. But the bigger thing, I think, the simpler way to look at this is that we tried to reach up into balance highs with a lot of aggression from buyers and a lot of size, and they failed miserably. They got liquidated very quickly. Yes, sure, it happened based on, Trump tweet, if that's how you want to interpret that. But to me, at least, it seemed like the writing was on the wall for that failure to start to take place around midday on Friday. It looked like there was potential that we would liquidate, and sure enough, we did. So that's what I'm going to be looking for. I think the biggest thing that I'm going to be looking for here is we have an extremely wide range that we put in on Friday. My primary reference really is going to be the breakaway from from Friday's IB, which also turned into value area high on the week. So if you want to use it in simple terms, I essentially want to see if there's any attempt to backfill this profile. I want to be selling rips if we're getting into 60.90 to 61.10s on ES and we're failing. So if we see drives up into this area, basically up into this upper volume node, this high volume area, this LVN and this high HVN, as well as into the 61.10s, if we're failing drives higher here, I want to see the rotation back down and basically traverse value all the way down, and likely, in my opinion at least, potentially break that and get back into like the 6K area, into the daily balance lows that we've put in so far into 59.90s. So I'm leaning more on a sell side bias this week. I'm trying not to be too biased considering we are in balance, but at least from what I saw Thursday, Friday, I do have a little bit more comfort looking for that if we start failing drives higher. If we gap lower if we do gap lower, the primary reference really is going to be weekly POC. So if we're gapping lower, if we end up holding 30s down into the 20-day and the 50-day SMA, which is what these are, daily time frame, if we end up snapping back up here, then I'm probably not going to be a buyer. Still, I'm going to be looking to see if we have, again, responsive sellers that try and take us back down and ultimately break us lower. We do have this unfilled gap down here, 59.50s to 59.10s, as well as the 100-day SMA. This is ultimately what I'm looking for. Like, I think from these highs, there's potential this finally fills. That's the way I'm going to look at this. So I'm going to try and position for the short side of the tape, get us down and fill this gap, and then I think a larger decision is made down in this range, whether or not we're going to rotate back to the highs, put in new all-time highs, potentially with news that comes out. But that's how I'm going to look at it. So primary area is going to be 60.90 to 61.10s up here. If drives up here fail, I'm going to look for the rotations back down and ultimately try and fill this gap. NASDAQ, I'm going to be looking for pretty much the exact same thing. I have a little more confidence in the sell side on NASDAQ, just because of the way that, first of all, the way that it's sold the last couple of days, just as well as the fact that from a basket perspective, there's going to be less. There would be more, in my opinion, more rotation out of that higher beta and out of that growth, and potentially that's going to affect the NASDAQ more than it would ES, just with, obviously inflows and defensives, etc., that you'd see on ES that you're not necessarily going to see the same way on NASDAQ. So I think from that perspective, NASDAQ could be the easier sell. And for me, it's going to be up in here into 2160s up into 21700s is going to be the primary thing I'm looking at here. So these highs up here, Thursday's high especially, was it was extremely dense on the offer, and we saw huge volume and large size on the buy side of the tape on market not be able to press it higher. We did obviously grind this higher, but again, even as I was watching this all day Friday, it was a situation for me where every single high was getting offered extremely fast, and then we exhausted up here. I ended up catching a little bit of this, but I actually got stopped out and then left desk before this giant nuke. So I missed like 400 points on a sell that I was basically top ticking, which is really fucking sad, but that's the way it goes sometimes. So I just left my desk before any of that happened. I didn't end up catching it from the top, which sucks, but is what it is. And again, the same thing happened here on the Nasdaq that happened on the S&P. So we had all of this size, we had all of this, super aggression, try and break us away, try and break us back over these highs at 22K, and there was just no ability to do it. So we filled the RTH gap on the Nasdaq, and again reversed with a lot of volume on the day too. So same thing for me here. Really, I'm going to be looking, if we're driving up into 660s to 700s, either overnight on Monday or overnight Sunday or on Monday, I'm going to be looking to see if I can be on the sell side of the tape on a decent offer, again, to rotate us back down. I think the ability or the potential for NASDAQ to puke lower is higher, like I said. If we're gapping lower, again, I want to see if there's interest in sellers getting continuation sells below 21,370s, and in that case, I'm going to look for basically the rotation back down into 230s, all the way down into 100s. I want to see this area get tested to see what kind of response we get. And again, ultimately, I think the bigger rotation is going to be back into the balance lows down into here, down into 21,690s. So that gets invalidated if we find buyers basically over 21.7s. So if we're seeing these highs, Thursday's high, and this lower distribution of value on Friday, if we're seeing buyers get above this with some aggression, then the idea of selling this to me is invalidated. So if we see them try it and fail and get back under and start breaking back under 700s, again, that's wouldn't be an invalidation to me. But if we see real acceptance above and a press higher and real acceptance above 21,700s, then there's no sell. That's just how I'm going to look at this. But I am more interested in the sell side of the tape. The other thing, just to look at higher time frames, because I don't do that very often, is in these videos at least. I'm usually looking week to week because I think that's most beneficial. But the one thing just to keep in mind on the NASDAQ, or the one thing I'm keeping in mind of the NASDAQ, this is a 4-hour chart, but this is the first month since the August low, that we framed monthly value lower and we framed a monthly POC lower. So just with that being said, that doesn't necessarily mean that we can't, that February doesn't fly higher. It's entirely possible. It's entirely possible that my interpretation of last week's price action is invalidated completely, by one of Trump's tweets, and he could reverse course and everything, and this thing goes to new all-time highs. But as far as from what's happening on higher time frames, this is the first time we've framed value lower on the monthly since August, since we put in that significant low on August. So all of that is to say, the way that I'm looking at this week is more so interested in sell side of the tape. I do think there's potential we could have a bigger liquidation lower, especially now that FOMC is out of the way and the bulk of earnings are out of the way, which were also very lackluster. So that's the other thing I'm thinking about too here, is like the market reaction to some of these earnings makes sense, but at the same time, the actual earnings themselves have not really been great. Whether or not that matters for short-term price action, a lot of the time it doesn't. But it's just kind of things are lining up here that this seems like it has potential to have, a bit more of a move down than a move up from this range. That's how I'll look at this for the time being. So I'm not overly bearish as far as, I don't necessarily think or know if this is the start of a much larger correction down. I don't try and really predict those things. Again, I'm a short-term trader with this stuff. I try and keep this week to week for the most part. But I do think the potential is there to have a little bit. I think the potential on the sell side there is better this week. And then that opinion will change if we start breaking above those areas that I talked about. So that's how I'm going to look at this. I'm going to try and keep it pretty simple. I hope that helps. If you have any questions, comment down below, like the video, subscribe if you haven't. Appreciate it. Thanks.